Welcome to our new crypto channel here, where we're going to talk about Bitcoin, obviously, and other cryptocurrencies and make some predictions about possible future price movements. First of all, of course, I'm not a financial advisor. I'm just a regular private guy who's enjoying to talk about coins, so don't take anything I say too seriously. It might be completely wrong. It might turn out to be complete and utter crap, so keep that in mind. I got into the market in the year 2013, so I'm like one of the older guys in the market basically, and I think I acquired a bit of knowledge of the stuff, which I'm going to share with you now for free. Like, I'm just going to talk about it for free, and you can maybe find some helpful stuff or not. So let's take a look at the long-term Bitcoin price chart. And we always will look at logarithmic price charts, okay? We never look at a linear chart because it doesn't make any sense to look at long-term Bitcoin price charts with the y-axis being linear. We always look at the price chart with a logarithmic y-axis. Why? Because if I just make it linear, you will not see anything of what happened before, say, 2015, right? Because the prices have gone up so much since then, basically, that here you only see a very flat, like it looks super flat from 2010 till 2013. Then you see a small bump here in 2013, and then it's a flat again until 2018, 2017, the famous late 2017 bubble where it went up to 20,000. So it doesn't make any sense to look at it in a linear perspective. We will always use the y-axis being in logarithmic mode. And what can we see? Does Bitcoin rise in a linear fashion in the logarithmic chart? That would mean an exponential growth, because in a logarithmic chart, if you have a linear line, this is actually an exponential growth. Does it rise in a linear fashion? Like, is it just a line in the logarithmic chart? No, it's not. We can see that basically it's like a curve. Like, what? It's curved. Look. Oh, it's rising, and it seems to be slowing down. Okay? It seems to be slowing down. It seems to have like a kind of behavior like a square root function in the logarithmic price chart. So basically the adoption is happening in a very fast manner, but it is not purely exponential, okay? We see that it is slowing down. And this behavior is called the law of diminishing returns. So over longer periods of time, the Bitcoin price increase is diminishing more and more. So this means if you got into the market in 2010, 2011, you could have seen insane price increases in a relatively short amount of time. Whereas if you get into the market nowadays, the price increase is not as insane anymore, and you have to wait for longer periods of time to have a return of invest that is pretty high. Okay, so this is the law of diminishing returns. I'm using a TradingView macro here, which I can also share with you. I mean, I will link to my TradingView. You will find me also on TradingView under Sebastian of Moon, and I will share with you all the scripts and all the stuff I'm using. So here you have a fit of that whole thing, and it strangely looks like a Nike sign, like just do it, just do it. And Bitcoin is indeed just doing it. What can we see? I mean, we can see there are like areas where Bitcoin is rising brutally in a short period of time, like here and here and here and here. And then there are areas where Bitcoin isn't doing a lot, like here, or it's even falling for a longer period of time, like here and here and here. So these are the bull markets and the bear markets. So Bitcoin is sometimes aggressively rising and sometimes it's falling over longer periods of time. But there seems to be some kind of behavior where sometimes it's like it's going berserk and then it doesn't do anything for a longer period of time. Why is that? Well, you will hear people saying that this is because of the halvings, and only because of the halvings, which I will argue now is not entirely true. In fact, there seems to be a correlation of Bitcoin with other assets. What? But Sebastian, I thought Bitcoin is uncorrelated with other assets, because I always keep reading on the Bitcoin Talk Wall Observer thread that Bitcoin is completely uncorrelated, and let's hope that the stock market will crash, because that means that Bitcoin price will explode. And this is absolutely wrong. There is some kind of long-term correlation with other assets, believe it or not. What kind of correlation will we be able to see? Let's try to find this out, okay? Here in TradingView, I can compare stuff, for example, right? I can have the Bitcoin chart in the upper half, and I can have, for example, the SP 500 in the lower half. So then, can we even see any correlation between Bitcoin and the stock market? And well, it turns out, yes, I will say yes, there is a long-term correlation. So for example, the first bubble went from, like, say, September 2010 until May 2011. What will you find in the stock market? Oh, look, what a surprise! The stock market also rose in the same period of time. And when the first bubble popped in Bitcoin, which went from June 2011 until November 2011, we can see that the stock market too saw a correction in the same period of time. And then look at this here. We have these small two rallies in Bitcoin in 2012. And what have we here? Oh, we have two small stock market rallies almost at the same time. And then when Bitcoin started the very strong bull run in 2013, then we also see a quite strong rise in the stock market. Now, this here is a time where an event took place which we know as the halving. In late 2012, there was the Bitcoin halving. As far as I remember, it was in November 2012. So what happened? Here is the halving. Bam, we get an insane rise. However, the stock market didn't rise quite as dramatically, so therefore, because Bitcoin rose so much, we have a stronger correction move here, which went from late 2013 until early 2015, where indeed in this period of time the stock market did not experience a strong correction. However, later we can see that the correlation starts picking up again. For example, in 2016 again, when Bitcoin started the most insane phase of the last bull run, basically from, say, October 2016 until December 2017, what can we see? We can see that the stock market also makes a very aggressive move upwards. And now we can see that here, as soon as Bitcoin starts correcting, up here, we can also see the stock market correcting. And notice the insane similarity of this dump here. Like the price, like look at this insane similarity of how this is correlated. This is crazy. Of course, we can see this also here with the COVID drop. And moving to our current time frame, we can see that Bitcoin is now in kind of a bull market and the stock market also. We see that the behavior is not exactly the same, but it is on large time scales very similar, and I would suggest quite correlated, okay? So Bitcoin is not, as some people would have you believe, a completely uncorrelated asset. On longer time frames, it is correlated. I will argue that it is correlated with the stock market, positively correlated with the stock market, and negatively correlated with the dollar index. So let's have a look at the dollar index. So Bitcoin, first insane bull market in 2010 until May 2011. What do we have here? The dollar index is falling. As soon as the dollar starts rising, what happens? The Bitcoin is falling. Huh? How surprising. Then the dollar does a long sideways movement, okay, so really long sideways action, and Bitcoin has a very strong bull market. Why? Because of the halving in late 2012. But then as soon as the dollar makes an insane upward move and really increases in value, what can we see here? Bitcoin is having a strong corrective movement. Then the dollar does a long sideways. What does Bitcoin do? It has a long sideways slightly rising upwards because at some point in 2016, it was in August 2016, the halving event took place. And the halving means that suddenly the inflation of Bitcoin is decreased by a factor of 2. So the amount of new coins that come onto the market by miners is decreased by a factor of 2. So this means less coins are mined. Only half of the coins are mined and come onto the market, which normally means an increased buying pressure. So we see that Bitcoin is doing this upwards move, and how nice is it that at the same time that the halving takes place, the dollar index decides to fall sharply down. Isn't that a funny coincidence? So we see that this is like super anti-correlated here to the dollar index. Then the dollar index rebounds again and goes upwards. And what do we have here? In the same time period, Bitcoin is having a bear market. Let's now look at our current time. So we see that after April 2020, the dollar started dumping from like 103 to a local low of 89. And what happened in the same time period? Wow, what a surprise. Bitcoin started the bull run. And as soon as now the dollar started going up again, Bitcoin started going down again. What a surprise. So maybe there's a strong anti-correlation of Bitcoin and the dollar on long time frames, and a strong correlation of Bitcoin with the stock market also on long time frames. This doesn't work on short time frames, however, because on shorter time frames the correlation is not so strong. But Sebastian, enough of this already, okay? This is like very theoretical stuff. We want to have a price prediction like when moon, okay? So we established now that there's a strong anti-correlation of Bitcoin with the dollar index on longer time frames. So what does that then mean for Bitcoin and our moon time? Now let's look at the dollar index on very long time frames. In this candlestick chart, one bar has a width of 1 month, okay? This is like the monthly chart. So what can we see? We can see that the dollar is in a descending long-term channel. Okay, since 1986. Interesting. And we are here. This is now our time in September 2021. What can we see? Well, we can maybe see that the dollar is having cycles. There's one cycle here with a duration of from 1986 until 2001, 15 years. We have the second cycle, this one here, with a similar duration of this time 16 years from 2001 until 2017. So let's see if we can find out what the dollar will be doing in the future, and hence try to find out when Bitcoin will moon. So we saw that the dollar has a 16 or 17 year cycle, and I'm going to argue that we have entered a next bear market for the dollar. Now let's take a look at the relative strength index. What can we see here? We see that we have a bearish divergence. This means the price is rising, as you can see here, while at the same time the relative strength index, the RSI, is falling. So that is a very bearish indicator. We call this a bearish divergence. This means that with a very high likelihood, the dollar at some point in the next months will witness a sharp fall. And this will be our catalyst for the next big upside Bitcoin move. Now in the shorter time frame of weeks, however, we can see that the dollar actually has a bullish divergence. We see that the price is going down here. However, the RSI is going up. This is a bullish divergence. This means that in the shorter time frame of weeks, the dollar might actually rise. And this is all in like the geopolitical scheme of things. It makes sense because the Fed is now talking all the time about tapering. So we might see an announcement of tapering. However, I suspect that a tapering will be announced and then afterwards it will be delayed, which would fit perfectly the scenario that in the shorter time frame of weeks, the dollar will be rising, and in the longer time frame of months, the dollar at some point will start falling again. If we go back to the monthly chart, we can see something else. We can see that not only do we have this falling trend channel that I drew before, And not only do we have this bearish divergence in the relative strength index, but no, we even have a Wyckoff distribution pattern. Look at this here, it's a classic. If you don't know what this is, for example, on stockcharts.com, you can find how the Wyckoff distribution pattern looks like, and we can see the insane similarity with this structure here that the dollar is doing, which is also perfectly correlating with our theory that we have this very bearish price action here on longer time frames of months. So we have now established that at some point in the next months, the dollar index will start declining, which will trigger a sharp upwards move in Bitcoin and which will conclude this Bitcoin bull market. However, in the shorter time frame of days or weeks, the dollar might actually pump, which could lead to a short-term price decrease of Bitcoin. Now let's finally have a look at the Bitcoin chart. If we look at the long-term Bitcoin price chart in this curved trend channel that I have drawn before, we see that we are somewhere in the middle. So we could go down as low as 20,000 and it would still be bullish, or we could go up as high as 130,000 and we would still be in our long-term trend channel with the law of diminishing returns. But what can we see here now in the daily chart? We can see that we have, friends, a bearish divergence. This means Bitcoin price is rising, however, the RSI is falling. This means this is a bearish divergence, the same as we had in the case of the dollar before on long time frames. This means that short term, it is very likely that Bitcoin will fall. Where will it fall to? Well, now we have to employ the famous Fibonacci support and retracement levels. Let's just, for better visibility, disable the long-term price channel. And what can we see here? We can see that there's a very strong support at 37,000. I suppose we will see something like this happening, going back to 37,000, bouncing around for a while, and then up we go at some point in the next months. This will perfectly correlate with the price action of the dollar, because we saw that short term, in the time frame of weeks, the dollar will probably pump. This is in line with our thinking of the Fed tapering talk. And at the same time, Bitcoin is having a bearish divergence in the daily chart, which makes it very likely that Bitcoin will fall back to the 0.236 Fibonacci support level at 37,305. Here we can see again a nice Wyckoff distribution pattern. This whole thing is, by the way, extremely similar to this whole structure. It looks like a fractal. We will also be talking about fractals a lot. These are self-similar structures where you see a structure looking insanely similar to something Bitcoin has done before on maybe the same time frame or longer or shorter time frame. So these are just similar structures. Fractal comes from a mathematical structure, for example the Mandelbrot or Lyapunov fractals, which you might know from mathematics. So now we basically have established that, okay, in the shorter time frame Bitcoin will probably fall. However, since the dollar is very bearish on longer time frame of months, and it's probably entering a long decline again, which could take many years, it is very likely that at some point the Bitcoin rally will resume again. And this probably will happen at some point in the next months. Now let's have a look again at our long-term Bitcoin price chart with the cool inverted Nike just do it symbol. Just do it Bitcoin, do it. And so we said that it is very likely, because of the bearish divergence in Bitcoin on the daily chart we saw before, and because the dollar will likely pump in the near term future, it is very likely that Bitcoin will first see a drop and then it will go up and away. So we might see something like this, a drop to that level, and then it resumes the bull market. And maybe at some point in 2022, I would say mid 2022, we will have the peak of this cycle probably at around 180,000. This is the top of the upper band, and we can see that the top of this upper channel is being respected time and time again. So we might have the fourth top at around 180,000 in mid 2022. This is also correlating nicely with the idea that the Bitcoin cycle duration is increasing. From the first top to the second top, it took us 896 days. From the top of the second bull market to the top of the third bull market, it took us already 1477 days. Aha! Could it be that the cycle duration is actually increasing? And now we might actually see a duration of more than 1477 days, maybe something like 1645 days, or actually it might happen that it's even longer until, say, the end of 2022 or early 2023. In this case, the cycle duration would be 1800 days roughly. And we can see that if that happens, Bitcoin will also go to much higher targets. We might have a top of actually around $230,000. So I see something like this happening in the near-term future. A drop to around 37,000-ish, then bouncing around for a while, doing weird stuff. We might have some drops in between, and then it starts rising and again, starts rising, and we see a top in mid to late 2022 or early 2023 at the latest. So friends, here you have it. When moon, I think mid 2022 until early 2023. And on this channel, by the way, I will also do a lot of altcoin analysis. You know, I will look at different altcoins. But for this first video, we only looked at Bitcoin because Bitcoin is the leader, okay? If Bitcoin rises, then all other altcoins basically follow. And if Bitcoin does a bear market, all other altcoins will also have a bear market. It cannot happen that Bitcoin has a bear market and is going down and the altcoins will have a bull market. Forget it. It will never happen. So basically we established that at some point in the next 6 to 14, 15 months, Bitcoin will probably have the top of this cycle and the altcoins will accordingly follow. But we will do some detailed altcoin analysis also very soon. So thank you very much for having patience with this very first video. I know my pronunciation sucks sometimes. I'm doing my best to speak English freely without any script. So thanks for sticking with me. And be patient in this insane market because patience is the key to survive this crazy crypto market. So then, bye and until next time.